If you are an Ontarian living with a prolonged mental or physical impairment, or you are supporting a family member who is, you could be leaving thousands of dollars in unclaimed tax relief on the table. Now, we already have a full, comprehensive masterclass video and a complete step-by-step written guide on our website covering the nationwide application process. But today's video is a highly specialized breakdown specifically for the province of Ontario. We also have an in-depth, location-specific written guide on our website with extra regional details and resources, which is fully linked in the description below. In Ontario, a successful application can translate into $1,500 to $2,000 per year for an adult in tax savings, with families supporting a child with a disability receiving up to roughly $4,000 per year in combined relief. Furthermore, if your impairment has impacted you for years, the Canada Revenue Agency can review up to 10 past tax years, which can unlock a retroactive lump sum payout of up to $40,000. Today, we are breaking down the Ontario Disability Tax Credit step by step with zero fluff and complete clarity, so you can claim exactly what you're entitled to.
First, let's clear up what this credit actually is. The Disability Tax Credit, or DTC, is a non-refundable tax credit. That means it directly reduces the amount of income tax you owe to the government. It does not issue a direct payout if you have zero taxable income. The total value of your savings is calculated by combining two distinct portions, the federal disability amount and the Ontario provincial disability amount. Because it is non-refundable, its true cash value depends on whether the applicant, or a supporting family member, paid income tax during the approved years. If the individual with the disability does not have enough taxable income to use the credit, the rules allow you to safely transfer the unused amount to a supporting family member, like a spouse, parent, or child, to lower their taxes instead. To successfully get approved, your application must meet the CRA's strict eligibility boundaries. It is divided into three primary requirements. First, the impairment must be prolonged, meaning it has lasted or is expected to last for a continuous period of at least 12 months. Second, it must fall into the core categories of impairment recognized by the CRA. These physical and mental categories are walking, dressing, feeding, eliminating, hearing, speaking, vision, and the mental functions necessary for everyday life. You can also qualify if you require life-sustaining therapy at least twice a week for an average of 14 hours. Third, you must pass the 90% rule. The CRA defines a qualified restriction as being present all or substantially all of the time, which is legally interpreted as at least 90% of the time. Under this rule, even with the use of appropriate medication, therapy, and medical devices, you must either be completely unable to perform that daily living activity, or it must take you at least 3 times longer to do it compared to someone your age without the impairment. The absolute number one question we get from Ontarians is, if I am receiving the Ontario Disability Support Program, or ODSP, can I still apply for the DTC? The answer is a definitive yes. These are entirely separate programs run by different levels of government. ODSP is a provincial income support program administered by the Ontario government for individuals who cannot work or have limited income. The DTC is a federal tax credit designed to offset the extra costs of living with an impairment. Getting approved for the disability tax credit will never penalize, reduce, or claw back your monthly ODSP checks. In fact, being approved for the DTC is now a critical, mandatory requirement to qualify for the Federal Canada Disability Benefit, which provides extra financial support to low-income Canadians. Remember, the CRA does not look at your medical diagnosis name alone. A diagnosis of severe arthritis, diabetes, or depression doesn't automatically qualify you. You must qualify either under a single marked restriction in one of the daily life categories we just mentioned, or under the cumulative effect, which combines multiple moderate restrictions so their collective impact meets that 90% threshold. In Ontario, conditions fall across physical, mental, or neurological spectrums, such as multiple sclerosis, Parkinson's, or severe ADHD. The core test remains the daily functional impact. Your doctor must explicitly document how the condition severely restricts your clinical memory, attention, problem-solving, or adaptive functioning in daily life. Securing your DTC approval doesn't just lower your tax bill. It serves as a gateway to several critical secondary benefits. Federally, an approved T2201 form unlocks the Registered Disability Savings Plan, or RDSP, with significant government contributions, the Canada Dental Care Plan, the Child Disability Benefit, and the Canada Disability Benefit. The application process itself is completely streamlined. Many Ontarians assume there is a separate provincial form, but there is not. Everyone uses the standard federal form T2201. You have two secure ways to complete it. The digital route. Log into your personal CRA My Account portal, fill out your personal details in Part A, and generate a unique reference code. You hand that code to your doctor, who logs into their secure medical portal to complete Part B digitally. The paper route. Download a clean, current PDF copy of Form T2201 from the link in our description below. You fill out Part A, your medical practitioner completes and signs Part B, and you submit the paperwork to the CRA online or via mail. Remember, your doctor must meticulously detail how your condition restricts your daily life. Vague notes are the #1 cause of processing delays and denials. Before you submit, remember these critical compliance rules to protect your application from a costly denial. Function over diagnosis. Make sure your medical practitioner documents your exact physical or mental boundaries, not just the name of the illness. The transfer trap. If you check yes to have the CRA automatically adjust your past taxes for a retroactive payout, keep in mind this only happens automatically for yourself or a minor dependent. If you are transferring the credit to a supporting family member who is 18 or older, you must file separate Form T180J adjustment requests for each previous year you want to claim. Timeline alignment. Ensure the year your doctor states your severe limitations began matches up with the retroactive years you are claiming in your tax history. Navigating government paperwork can feel intimidating, but ensuring your application is flawless is the key to unlocking the financial support you or your family rightfully deserve. To read our full, comprehensive Ontario Disability Tax Credit written guide, see real-world diagnostic examples, or access our free online tools, click the links in the description below. If you would prefer to have a dedicated team of experts audit your medical records, coordinate directly with your practitioner, and manage your application from start to finish, you can request a completely free, no-obligation assessment on our website today. If this guide brought you clarity, please give us a like, subscribe to our channel for more Canadian benefit updates, and drop your questions in the comments below. Thank you for watching, and we'll see you in the next guide.